One of the biggest misconceptions in trading is that market structure is only used in day trading or swing trading. This isn't about finding the next hot stock. This is about knowing when to buy into these quality companies. Before I invest my money, I still want to know what price is doing. I don't buy stocks just because they're a good company. I want great companies at great prices. And market structure, as we're going to see here on Apple, will show me where institutions are buying, where demand is sitting, and where a better opportunity to buy is at. The first stock we'll look at is Apple, and this is on the weekly time frame. And they're right here. This is a week. And so first thing I'm going to look at is, we're going to zoom out. We're going to see what the overall trend, and you see on the weekly we're trending up. Now, where are the major demand zones? Well, the current major demand zone is right here. This is our last down candle before this leg up. So this is our weekly demand. As you see, I have marked here. This is a good discount zone. Okay, now here on the monthly chart, you see I have this monthly fair value gap marked out. And, when you get a monthly gap like that, that's not retail money. This is institutional money. Retail does not have enough funds or volume to push a monthly candle up like this. So I will mark out a monthly fair value gap like I did here, and you see right above it we have another weekly demand, and let me show you that. We'll go right here is a weekly demand of this leg, and as I said before, here is our current weekly demand of the leg we're on now, and these would be discount zones. So we would wait and want to see, do we hold here or come back to here? And when price comes down to these demand zones, that's when I start getting interested. Do we hold here or do we bounce? And I just wait for market structure to tell me what we're going to do. If we continue to fall, I will wait until we get to this demand and see what happens here. Now, our next example is Tesla. We're on the weekly, and you see over here was our weekly demand. And that is this candle right here. This is the last down candle before this leg push up. And so here's our weekly demand. And we're just, we have already came down and been inside this demand zone. So, that had my attention. And when you flip over here to the monthly, I don't see any monthly fair value gaps. So if I don't see that, I simply look at the weekly demands, and we'll mark those out just like I did here. And this is the current weekly demand that we are looking at. And if we break through that and fall, this right here would be the next one. And we would wait and see what kind of reaction we get here. And when we get in these zones, like I said, this is when I really pay attention to price and see what kind of reaction we get from a zone here. But these would be discount zones. Now here's another example. This is NVIDIA. And this is on the weekly chart. Same thing here. Here is our weekly demand right here, because we had this leg up. This is our last down candle before the displacement up. So that is the weekly demand. We also have let's go to the monthly. And as you see here, we have a monthly gap right here. Because we have a gap between this candle, and there is our little monthly fair value gap buy side. So as I said, retail money cannot make a monthly gap or a candle like this. This is all institutional money. So I want to know when they are buying and getting in also. So, we did come down into that monthly gap. We dipped pretty good, got down here to 190. So, that had my attention. And these would be, this would be considered a discount zone because this is that fair value gap. And you see we got a displacement leg up here on a weekly candle. This is not retail money. This is institutional order flow here. we did not come down and hit this demand. We stayed above this fair value gap on the monthly chart. And you see we held the 50% mark on that. So, that tells me buyers are really in control right now on NVIDIA. Here's another one on Amazon. This is the weekly chart again. And here is our weekly demand. This is the last down candle before the previous leg up. And we have pulled back. This is our monthly fair value gap. Go to the monthly. And you see we have a big gap from here to here. And like I said, when you get a monthly candle like this is not retail money, this is institutional. And that's what I want to know is when institutions are buying. I just don't want them get in randomly. I want to try to get in the discount zone. I want to try to get in when they are getting in. So, this had attention. When you get down in here, you're dipping into a discount zone. Whether that be at this fair value gap on the monthly chart or down here to the demand. You just have to wait and see what kind of reaction. And here we got a strong reaction on the weekly. And so price is trying to push on up. And we'll do one more here on Meta. And you see Meta here is our weekly demand because here is our last down candle before this leg up. So we've got our weekly demand marked. There is a monthly fair value gap buy side right here. We will look at that. Zoom in. You see right here it is from this candle here up to the bottom of this red one. And we have not filled it. So, this was defended. So that, that's should tell you, that's going to be a pretty good support area. And so, right now we've pulled down here to 50% and tested once. And it looks like we got close, tested again, and we've tested again. So we could potentially come on down to the bottom of demand on Meta and check that. But it's going to take a while. Remember, these are weekly candles, so it's going to take time for these to reach zones. So, but once I get in these discounts and this demand or fair value gap on the monthly chart, that's when I start paying attention, watching price. Do I feel like I need to invest more in this stock? After I mark my demand zones on whatever stock I'm looking at, I want to know, is this going to be a long-term thing that I'm going to hold for a long, long time? Or am I just going to swing trade it? Am I just going to be in it for a month or two? But those decide on where I look for my price targets. And then, if it's going to be something that I'm just going to hold for a few months, I mark out my price targets on that stock. And that gives me a good plan before I ever buy. And then I'm not trading emotionally. And let me give you an example of one that I traded with a swing. And I only held it for a month, but it hit my price target area and I got out. And I'll show you here on the weekly. This is Intrepid Potash, IPI, and it's just a swing stock I did earlier this year. But you see here we had the monthly fair value gap. And we just kept coming down and tapping the top of the box. So I bought here at this arrow. Let me zoom in so you can see it. Bought in here. And then so, I knew I wasn't going to hold it for long. It's a seasonal type stock. So then where do I know price is going? Well, I take the fib and I will go from the top of this previous leg to the bottom of it, use the wick and everything. And so I was targeting right here, this 1272 on the fib. And I see I got pretty close to there and took profit because I'm always on the conservative side. Sometimes you can get stopped out a little bit early. So I'm going to be cautious and take my profit. Now, what kind of gain was that? Well, that was from here up to here, 36.23% gain in a month. So good gain, good little swing. Remember, market structure isn't just for futures and options trading. It's going to be framework that's going to help you better understand the price action. It's framework that helps me make decisions whether I'm day trading, swing trading, or long-term investing. The goal isn't to predict every move. My goal is to stack the odds in my favor before I invest my money. Same as in day trading: preparation, patience, and discipline. One good investment at the right price can be better than 10 rushed decisions.